transfer of a capital asset by a partner, comma, member of a firm stroke AOP. Section 45, subsection 3. As usual, we first need to understand what are we talking about. So let's say there is a firm. Okay. There are these two people, X and Y. Y is an existing partner of a firm, okay, and X is proposed to be introduced as a partner in the firm, right? I'm taking the example of firm. This is equally applicable if instead of partners you had a member and they wanted to do this with the association of person or body of individual. Please note this section is not applicable to members of cooperative society or a company, right? It's applicable only either to association of person and body of individual or a firm. So what happens is that in this case, if these people had some asset, let's mark them as, right? If they transfer this asset to the firm, what is happening is maybe as a capital contribution, okay, capital contribution. What happens is effectively from their perspective, from perspective of X and Y, there is a transfer, right? Transfer of a capital asset. So ideally, if we were to go by the normal definition of capital gain, there should be tax which should be levied in the hands of these people, right? In that case, there is a section which is section 45(3), which provides how will you calculate the capital gains. So gains arising from, first thing is gains, there have to be some capital gains. So if you are transferring it at a value which is, or the sale consideration is treated as a value which is less than the cost of acquisition, then there is no taxation. What is sale consideration? We will just see. Gains arising from transfer of a capital asset, again has to be a capital asset, by partner to the firm. This partner can be current or proposed, or members to AOP or body of individual. So if you are an association of person or body of individual, when your members transfer these assets to you, again as I said, cooperative society and companies are not covered by way of capital contribution or otherwise. So you may contribute these assets as your capital contribution. You must have studied in class 12 in accounting that in some cases the partner, instead of bringing in cash, used to bring some asset to the partnership firm, right? So if you are bringing this asset as a capital contribution or even otherwise, any gains that accrue to you shall be chargeable under the head capital gain in the previous year in which such transfer takes place. So whenever you transfer this to the firm or to the AOP or BOI as the case may be, these shall be chargeable to capital gains tax, right? And what will be the sale consideration? The amount recorded in the books of accounts. Now this is interesting. So let's say your asset is worth rupees 1000, okay, and in the books it is recorded only at 500. In that case, your sale consideration to compute your capital gain will be 500, because the section specifically says the amount recorded in the books of accounts of the firm AOP BOI as the value of assets shall be deemed as the full value of consideration for the purpose of section 48. What this means is the fair market value in this case has no relevance. Whatever is the value recorded in the books of accounts, that will be considered as sale consideration. From this you will reduce the cost of acquisition or index cost of acquisition as the case may be to get the capital gains.